Alright guys, so our next chart that we're breaking down for this morning is NIO, or ticker symbol NIO. I am starting from a higher time frame, that being the daily interval. This allows us to find the overall direction and trend that our stock is in, our support and resistance lines, our exits, our targets, and all that good stuff. So let's go ahead and dive in. So yesterday we closed at almost down 3%, and this morning we're up almost 2%. Pre-market we're at 33.85, and so let me go ahead and check the volume real quick. So we're at 269, so we're above that 150,000 threshold that we like to see. Let me first go over the support and resistance lines for our new viewers, and then I'll go into where we're at exactly, okay? This top line represents our major resistance line that can be easily tested. You can see we get reacted and rejected over here, and over here, back over here, and over here. So ultimately about 4 or 5 times we were testing this resistance. What works on the opposite side of our resistance will be support. You can see that right here. We can see we bounced over here, over here, over here, and over here. Ultimately about 3 or 4 times. And until we got pushed underneath with resistance, and then pushed us all the way down to our major support line over here. You can see that we bounced over here and over here where we're at right now currently. And then back underneath is resistance over here. So these are heavily tested areas, you guys. Don't mind this middle line. This is just our minor resistance and support. Okay, so let's go into where we're at. So yesterday I said that NIO would be a great buy since we were bouncing off of our support level. I said that I have a shorter target, that being maybe around the $34 area. And so if you did this, good job, you got in at the right time and probably hit your target, okay? But as of right now, you can see that we're starting to pull back, and we're starting to go back underneath this trend line, you guys. So we have to be careful. It's showing that buyers are really no longer stepping up. Let me go ahead and break down to the 1 hour chart so we can see these candlesticks more individually and in more detail, okay? Let me go ahead and zoom out just a little bit. So this is where we were yesterday after we broke out, or basically a breakout, because we were underneath this resistance. So we created this breakout, we're creating these higher lows, and then we gapped down, breaking all these prior candlesticks. And so basically we're showing is that we're now starting this downward trend again, you guys. So we have to be cautious and we have to be careful. This was more than a 50% retracement that we would like to see. We would have had this to pull back maybe around to the $33 area. And right now we're actually below that. So I would just say that we stay cautious, you guys. This may push all the way up to the $34 area before starting or continuing this downward trend. So what we want to see for this to continue its upward trend, you guys, is if we can break past the $34.64 area and come back down and retest that. So if we can break above this and come back down and retest that and create that higher low around the $34, $34.50 or 60 cent area, that could be another good entry. Have your stop loss maybe underneath all of these candlesticks over here, and that being at the $32.55. We want to have at least a tight stop loss right now since we're not near the support line, okay? So, and then your first target would probably be around the $35 area, and then your second target being obviously all the way back up here at the $41 area, okay? But yes, since we did gap all the way down here, you guys, and you can see the clear upward trend that we were in. It was starting to be a beautiful upward trend until we had this gap down underneath all of that, okay? So we have to be cautious. We may be pulling back down to our major support line. So your second ideal entry would be that. This would be the more safer entry, you guys. We could wait until we pull back down to the 31.72 area. Then you can have your stop loss on the opposite side of that support. Maybe have it at the $31 or $30 area for your stop loss. And so if we do break below this support line, that could be another good stop loss area so that we can protect our assets and have money management, okay? But as of right now, getting in would be really aggressive since we have all this prior price action history over here and this top over here, okay? So we want to be able to at least break above this and basically continue what we were doing before, creating these higher lows, okay? But us gapping back down underneath is not really a good sign, you guys. It's actually a bearish sign. So I gave you guys the 2 ideal entries. We can wait until we can break above the 34.60 area, or we can wait till we pull back down to the $31 area and have a stop loss below our support line, okay? So I I wanted to make this video very short and sweet. Sorry. And if I did that, please hit that like and subscribe button. It allows me to create this content for you guys Monday through Friday. But other than that, I hope you guys have a beautiful day and happy trading.